If you see in terms of the auto sector, it's one of the first companies in 2 decades, a new one that is getting listed. Now, whether you call it a new kid on the block or a new grown-up on the block, that is something that we need to wait and watch. But Sajid, overall, 7,000 crores is what we're looking at. How are they going to utilize the funds and what do the valuations stack up?
So, the entire breakup of the IPO is going to be in form of a fresh issue and the offer for sale. The fresh issue comprises of 5,500 crores. That includes the 1,100 crores of pre-IPO placement that will happen before the RHP is filed. That means in early next year, whenever the IPO is coming in, that's just before that. But there is a 9.5 crore shares of OFS, which includes 50% of that is coming from Bhavish, who is a promoter of the company as part of the OFS. And based on the calculation that we have done, it seems to be that that OFS will be around 1,400 odd crores. That takes the total valuation to close to 7,000 odd crores there, which basically means that at 144 rupees a share, after all the CCPS is converted and the shares are fully diluted, the company would be valued around at around 59,000 odd crores, which is $7 billion. So between 140 and 144, it's between 6.8 to $7 billion of valuation that's coming for Ola Electric Mobility.
Right, and this does tell you any details in terms of how the shareholding pattern will change in terms of pre as well as post?
So yeah, so as per the DRHP, promoters which includes Bhavish, ANI Technologies and Indus Trust, they currently own around 45.14% on a fully diluted basis. Public, which includes all the investors, which includes SoftBank and Matrix and other investors, hold nearly 47%, and there is little, and the employee trust owns over 7.6% in the company. Once the IPO comes in, which is 5,500 crores of fresh issue, and OFS happens, the promoter stake is going to get diluted to 39.6%. The public will be holding roughly around 53.4%, and the employee trust will be holding somewhere around 7% in the company.
Right. Now, this takes me to the next part of it, Sajid, is in terms of the EV penetration in the country, right? From what data is suggesting is that the penetration in terms of two-wheelers is much more versus penetration in terms of four-wheelers. And if that is the trend that is expected to continue, how does it augur for Ola or... And if it augurs well for an Ola, which are the regions which are driving this growth?
So you need to look at the penetration from a point of view that EVs as a category has been growing since last 5 years, 2018 onwards. And Ola is relatively new in this business because this first operations began only in January of 2022, after when it started selling its S1, Ola S1 Pro to all the customers there. So, from that point of view, Ola's his financial history as well as operational history is very limited to the to nearly two odd years, which is there. But look at the penetration of EV two-wheelers. They are currently at 4.5%, and that is of FY23 I'm talking about here. And for EV four-wheelers, it's around 1.2%. 2%. All two-wheelers have been growing at a much faster rate, and that was primarily because they had that benefit of FAME subsidy which was coming in, though the subsidy has been pruned down and only 2 select models of Ola will be getting that subsidy, but it's still a push for that entire electric vehicle part. And what is expected is that by 2028 or fiscal 2028, nearly 50% penetration would be achieved by electric two-wheelers, which basically means it's a big, big runway for many of the players, including Ola, going forward. And the drivers of this is primarily coming from some of the tier 2 and tier 3 cities like Kolhapur, Surat, Ajmer. These are the kind of cities where we have seen a lot of penetration coming in. Like Kolhapur has nearly 23% there. Surat has 15%. Ajmer has 13%, and in some of the states like Goa, the penetration is as high as 16.6%, Maharashtra with 10%, Kerala, Karnataka with over 11% penetration coming in. So the penetration is largely led by two-wheeler, tier 2 and tier 3 cities for electric two-wheelers here.
Absolutely, that's what your data is pointing out too. Now with this, where does this take Ola's market share, and what's the kind of run rate that is expected, because they are the leaders, right?
So, Ola has been very aggressive in marketing its scooters, and scooters are doing well as well. If you look at the total EV sales that happens on a monthly basis, they have around 30 to 35% of the market share which is coming in. They had the sales of 1100 in January 2022 when they started the production initially, and then it went to 30,000, just before in November. Because 29,900 odd shares that was there. Now, if you look at the average, it's for FY24, it's coming to 22,500 per month, which they are doing it. We assume that next 3 months they will be doing 24,000 for every month, Jan, Feb, March. So you're going to hit somewhere around 2.7 lakh units of sales for Ola alone, compared to 1.5 lakhs in FY23. That's a 73% jump in unit sales that's coming in from Ola alone.
Right. So when you're looking at 2.7 to 2.8 lakh units in FY24, the financials, if we watch out for that one, what's interesting to note from the financial perspective is that the per unit cost of Ola is getting expensive. If you see the graphics on the screens as well, clearly an increase in terms of the revenue per unit, right? And secondly, the revenue is almost doubling. Now, first question coming to you is the revenue per unit, what's the reason for that to increase? And secondly, is the revenue increasing mainly on the back of that factor, or are there other factors at play?
So the P&L of an electric vehicle works totally different from an ICE vehicle. Nearly 25% of the total cost is on account of their battery and the battery management system. Now, battery prices have been coming down in the last 12 to 18 months, and that's a good thing because that brings down the cost for them, and that's been reflected in Ola's total cost of goods consumed. If you look at FY22 and FY23, that's where the financials are available. 84-85% of the revenues was accounted by cost of goods consumed. Now, in first quarter, it came down to 76%, which basically means that there is an operating leverage which is also playing at here. If you remember, Ola is also building gigafactory for cells, which it has a PLI for 20 gigawatt hour factory with spread over next 4 years. The first gigawatt should come in operationalized by FY25. Now, when that comes in, you're going to have some more better leverage coming in with respect to cost, because the cost is expected to come down by another 20 to 25% as it happens. And so, if you look at what I say here is revenue per unit, which was 1.6 lakh, it has gone to 1.76 in FY20, will go to 24. It basically means that, the mix of the product is much in that Ola S1 Pro, which is an expensive product, is going at a higher price as compared to Ola S1X, which is at 1.2 and 1.4, and starting level is 1.2 for that. So the price per unit, they've been able to sell much higher valued unit, and that's what is reflecting here. And based on that one, when we calculate, because Ola's revenue recognition is based on when it delivers to the customer and not an X factory when it goes to a dealer. So based on that, what we're projecting is that with 2.7 lakh units in FY24, the revenue is expected to be nearly 4,790, and gross margin of 10% is 479. It will still be making an EBITDA loss, and it will still be making a PAT loss in FY24.
So my next question coming to you, Sajid, on this is, when does Ola hit profitability? Because that's what is going to be absolutely key as well, right? As to what are the parameters that you would be considering, and which year do you see Ola hitting profitability?
So there are a couple of factors which are in play. One is the Ola Gigafactory coming into operationalized, so we don't know the cost structure of that and how it's going to play. But let's keep that aside and look at the two-wheeler space itself, how the two-wheeler is looking at. If Ola is able to sell, say, 3 lakh units in FY25, and it's able to bring down the cost of goods consumed to below 70%, which it can, because it will have its own batteries and other stuff coming in FY25. We expect the calculations say that you can make they can make an EBITDA positive and a PAT positive in FY25. given the fact, I'm again putting it everything here, that Ola Giga factory has to come into play, and we don't know the cost structures which is going to happen, and there is a constant capex which is coming in. So you will have a good amount of depreciation and other amortizations coming in for that build up of the Giga factory, which has to be done in next 4 years.
Right. So the gigafactory at play. In consonance to that, the 3 lakh number magic, the 3 lakh unit magic number, and number 4, cost efficiencies that come in. All of this have to work in tandem for a FY25 to be profitable. And with that, if you have to look at valuations and compare it to the other ICE traditional two-wheeler players, where does it stand?
It's some would say that it's unfair to compare both of them, because one is ICE and one is electric vehicle. But the ICE companies, both Bajaj, Hero Honda has gone through an investment mode into Ether. Bajaj is coming out with its own, and TVS has its own. So while the volumes are not big enough, they are still in the early phases in electrification of two-wheelers there. But having said that, because all 4 will be two-wheelers, we are looking at, based on brokerage estimates, the market cap to sales multiple. We have Hero Moto at 2.2 times, Bajaj at 4.2, TVS Motor at 3.1, and Ola Electric at 12.3. So it's still very expensive in that sense. So what we need to be very careful here is that of course the path to profitability is one, and secondly, how the market is going to now look at EV players going forward, because that's something which even some of the other players like a Mahindra or a Tata Motors are also looking, because they are also going for an asset light model for the EV operations, and their operations have been also valued at close to $9-10 billion in that sense. So so that play out is going to happen, and how Street is going to react to it is something which we will
Absolutely.
watch.
And with this now, whether the analyst will also look at some of the parts and divide it between electric and non-electric and give a valuation to the electric portion will be interesting to watch out for. But this is a complete roundup of Ola Electric. Clearly, from a valuation perspective to what the funds utilized are going to be used for, where is the growth coming from, and when will Ola Electric actually turn profitable? We are looking at a magic number of 3 lakh units, and in financial year FY25, taking into consideration the number crunching that Sajid has done.